How can you go about making the most money in crypto in 2024? This is what we're going to talk about today. And what I'm going to do is I'm going to give you 7 factors that you must follow if you're going to maximize the amount of profit you make in this next bull cycle with Bitcoin. So stay tuned to the end because I'm going to outline how you can make sure the increases you make become profit that you can actually take out and know when to take out. So that's what we're going to talk about today on Crypto Intel. My name is Max. Let's get started. Okay, so the first principle is to establish your time frame. And what I mean by that is you need to have an understanding of where the cycle is going to end and where the cycle is going to begin. Now for Bitcoin, we know that there's a 4-year cycle that revolves around the halving event. The halving event coming up is around the middle of April 2024. We know that prior to the halving, there can be a run-up, maybe a dip, 20-30% dip, and then a nice run for about a year to a year and a half. Now, when I talk about establishing your time frame, that would be the basis of the time frame going forward. But we don't know if it's going to exactly be the same as in years past, because there has been some differences. Of course, in the last cycle, we had a double top. So the time frame was a little bit different because we had 2 tops. In the cycle before that, we had a very steep growth, and then the cycle was over. So it looks kind of like it's going to be the same as the previous cycle, 2 cycles ago, where we most likely will have a steep upplay, and then we'll have the turnaround. And that, my observation is that it'll probably take until around the end of 2024 or the first 2 quarters of 2025. Now, it could go longer. In some cycles, it has gone longer. Translated, that will be to the end of 2025. But we should keep in mind and look at various factors that can determine the length of this cycle. What are the factors? One factor is recession. If we have a recession, that can make the length of time for the upturn in Bitcoin shorten, or it can produce a big dip and then have a rebound. Second, the ETF approval. That can quicken the cycle so that Bitcoin reaches all-time highs and its anticipated high much quicker. And by the way, there are a lot of people out there calling for 500,000 Bitcoin, 1 million Bitcoin. We don't know what it's going to be. But if we look at past cycles, we can see that there have been diminishing returns. In other words, the amount of times that Bitcoin goes above or doubles its previous all-time high has been reducing. And I think a conservative estimate would be a Bitcoin right now topping out between 100 and 150,000. That's conservative. Could go higher, could go a little bit lower. But when you're planning your capital allocation, that's what you need to keep in mind. You need to have a conservative target and then a more optimal target. So that's the first thing. Understand the time frame. Understand that it can change. Now the second, decide on your capital allocations. And what that means is that you need to have a good understanding, and I've talked about this in previous videos, of where you're going to put your capital, in what assets. So in the crypto space, the way that I look at it, there are 3 areas where we want to allocate capital. One, of course, is Bitcoin. But in Bitcoin, you can also use proxies for Bitcoin. And I'm going to talk about that a little bit later. Second would be the major altcoins. That would be what I see as Ethereum right now and Solana. Both of these, I would allocate some to both of these. And then the third would be altcoins. And the way that I would distribute capital among these three different buckets would be about 30 to 40% in Bitcoin and Bitcoin proxies, about 40% in the major altcoins, Ethereum and Solana, and about 30% in altcoins. That's how I'm doing it. You need to adjust your capital allocations according to your risk. If you're if you want to be a little less risky, put more into Bitcoin. If you want to be a little more risky, put more into the altcoins, okay? So in terms of deciding your capital allocations, another thing to keep in mind is that your allocations are going to grow and move. So you need to watch it carefully. For instance, in the beginning of this year, the major play was in Bitcoin. If you put more of your capital into Bitcoin, you would have had a bigger rise than if you put it into altcoins. So if you did put more of your capital into Bitcoin, your Bitcoin is going to be much more than 40%, say. It could be 50, 60%. That means that you need to look at reallocating. You need to take some out of Bitcoin so that you have it to put into, say, altcoin. Now, the third thing, I mentioned this before, use Bitcoin proxies. Bitcoin proxies are going to go up, and I've done a video on this previous, but Bitcoin proxies, which are going to be things like Coinbase, things like MicroStrategy, and then also the miners, CleanSpark and Riot and so forth. These are probably going to go up much higher than Bitcoin. So in terms of capital allocation, I would allocate a certain percentage of what I'm going to allocate to the Bitcoin realm into these proxies. And the nice thing about proxies is that they're in the stock market. So you can use options, you can put them into your retirement account, and it's very easy to trade these and to watch them. So look at using proxies for some of your Bitcoin allocation. Now, the fourth thing, decide on narratives for your altcoin plays and understand a couple of different narratives and stay within those narratives. It's very easy, especially at this time in the market, to jump from one narrative to another, to always be looking at the next thing and never really get the understanding of the narrative so that you can play those coins in the best possible way. You want to pick a couple narratives that you're, comfortable with, and then understand those. Understand all the coins that can go into those narratives and play those. For instance, for me, I like the narrative of gaming. I like DeFi as a narrative, and L1s as a narrative. There's a lot of other narratives. Ordinals is one. Look at NFTs on Solana. You can look at meme coins. These are all narratives, and you can look at all these narratives, but my advice is to pick a few of them and concentrate on those. That way, you'll have a good understanding of who the players are within those narratives, and you can then buy the right coins when you need to. Number 5 is you want to look for some accumulation ranges, both within your narratives and also with coins that have had a good run last cycle but have strong fundamentals. And by accumulation ranges, what I'm talking about is a period of time when the price action is ranging between a high and a low. And you can see that very easily in the charts. When you see a range happening over a period of a few weeks to a few months to even a year or two, that will give you one of the good entry points for deploying your capital at a time when it's going to grow the best, all right? The second way to deploy your capital is by looking for dips. And by dips, what am I talking about? I'm not talking about a few percentage points in a day or two. What I'm talking about is a big dip down over a period of 2 or 3 days. You want to look for something around 20, I would say around 15 to 30%. If you see dips like that, that is a good time for an entry into the coins that you want to deploy. Now, the next thing is to use leverage, but to use leverage only very sparingly. And as a matter of fact, you don't really need to use leverage unless you've been around for a while and you understand how to deploy stop losses. You understand how leverage will affect you in terms of the price. I wouldn't use leverage at all, but if you're going to do it, I would only do it when you see those big dips in a coin that you know is going to bounce back, okay? So you want to have a coin that has good fundamentals like Bitcoin or Ethereum, Solana, maybe some of your top picks in your narrative of choice. When you see a nice dip that's 20, 30% in a few days, that is a time when you want to get in, and that is also a time, if you're going to use leverage, that's the only time I would use it. And I would use a small amount, maybe 3 times leverage, 4 or 5 times at the most, okay? And you must be on top of that, and you must only use capital that you know you can risk losing. And then finally, and probably most importantly, and this is what I talked about in the beginning, you do not make any money in crypto until you actually take it out. You need to have good tools that will allow you to understand when the top of the market is being reached. And there are a few different YouTubers out there, I think, that have good tools. One is Crown's Crypto Cave. Another is Ben Cohen. These all have tools you can buy if you want to help you to understand when the top of the market is being reached. But you can do that by just listening. Right now, most crypto YouTubers who have good followings and are, legitimate, giving you good information, are gonna have a very clear picture of when the top of the market is being reached. And like I say in the very beginning, when you establish your time frame, you're gonna look for around that time frame for the top of the market to be reached. So that's all for today. If you enjoyed the content, please give us a like, subscribe, and I'll see you in the next one.